CNBC-TV18, embarking on a quarter century of excellence.
Welcome back, and joining us on the show now is Atul Mundhra, founder at Atul Mundhra Associates. Mr. Mundhra, thank you so much for joining us. And the big news that came in today for your sector clearly has been that government looking at all essential commodities and ensuring that the inflation does not start striking has extended duty cuts until March 2025. Now, what is the reaction from the industry on that? I mean, I'm sure it's good news from the consumer, but as industry or for imports, what does it really mean?
Manisha, first of all, I am also a consumer, but I am very disappointed because after this news, soybean has gone below MSP, minimum support price, because there is a fear that government unnecessarily reducing the duty without any basis. International market is down by almost 20% in 1 month. Government has not taken that record in their record. Other country currency is going down. So they are selling very cheap to India. So India is now dumping ground. We are very much disappointed what government has done today. I am not happy. I don't know how to explain it. It's a very, very bad day for industry.
We have seen very high imports in 2023. Some months have been record months, whether it has been about palm or other edible oils as well. Do you see that scenario continue? Because we are high on inventories right now. Do you still feel that the imports will continue at the same pace?
Not only import of oil, now the big fear is dumping ground will be soybean seed and other oil seed in India, also from African countries. We are expecting almost now 2 million ton all oil seed to India. They are the duty-free oil seeds. Apart from this normal oil imports of which is going to go up by another 10 to 15%. And demand is not picking up either in the meal sector or oil sector this year.
But Mr. Mundhra, when you look at on a year-on-year basis and with the kind of decline that we've seen in oil prices, have you seen even a marginal increase in demand on a year-on-year basis? We usually see...
Not at all.
Okay. How are you looking at the pricing part itself? I mean, would you say we are near bottom? These prices have now been absorbed in? Or do you think because of this lower import duty continuing for another 1 year, are we looking at further price declines?
Yes, because a lot of seed import will come now, apart from the oil imports. My main fear is beans import and sunflower import, rice bran import, because government is not giving any export incentive. And on the contrary, there is a zero duty import. So we are suffering from the two fronts, not one front. Oil as well as oil seeds.
Within industry also, Mr. Mundhra, there are two parts of this. One, of course, is the importers itself, and the second is the crushing industry. Where do you also see the crushing margins continue to be under pressure?
There is no crushing margin. You see, soybean, the prices have dropped almost 10,000 rupees a ton after. You see, I am in my 45 years career. First time I see December we are below MSP. October it was above MSP. December we are below MSP. No one is taking care for that.
So, Mr. Mundhra, would it mean positive though for, as you said, consumers? It's a big positive for the consuming industries as well, for FMCGs also. I mean, I'm assuming the input or the raw material cost is now lower because we've seen that happen across essential commodities. We've seen pressure come in some sense in case of wheat, pulses, edible oils also is going to be one part of it. So, would you say for the downstream companies, it still is a good news?
I think the consumer will not be benefited. I'm sure this FMCG will company keep the margin. You can check the MSP retail prices at the counter. I don't find any much discount. Still, there is a gap of 30% between the wholesale price and retail price. So no one is benefiting. I don't know what basis they are taking. And second thing, please remember, if you are counting 8% inflation, edible prices are down by 40%. You take the 10 years average, we are not... go by the wheat prices, pulses prices. I don't know why government is looking only edible oil. There are other sectors. They are genuinely, government is giving the support by way of MSP and other things. I don't know what is the idea to go for a zero duty or 5% duty or whatever. I don't know. It's a very bad day for. I think it's the worst day for industry. They are giving unnecessary fear to the industry, whether they should run or it close down the industry.
All right, it's clearly a pain point. Thank you so much for joining us, Mr. Mundhra. So clearly, Ekta, I mean, we've been discussing FMCG as companies, as a sector there, but if the input cost is something that are going down for FMCGs but not being given to retail, I think there's a big margin that the FMCGs themselves are keeping on this.
Okay, all right, something to watch out for in terms of a queue, especially going into probably earnings season next quarter. But nonetheless, thanks Manisha for joining in. On that note, it's also a wrap on Halftime Report. Thanks very much for watching. Business Lunch up next.
CNBC-TV18, embarking on a quarter-century of excellence.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.